Hi everyone, this is Ankur from FinstudyClub, welcoming all viewers to the video series on one of the very interesting and sometimes considered to be a difficult topic called as employee obligation and pensions. Okay, so we are going to refer this particular video series with a more famously known name as the pension videos. And just to set the quick context up, rightly or wrongly, we are not commenting on that, but this is considered to be one of the most difficult areas, from a knowledge standpoint, from a student standpoint, and there is a lot of confusion that crops up. So what you got to consciously try and do it is that you got to avoid the confusion. There are confusions which happen at different points. We are going to kind of just touch upon that in the small introductory video. Is that this is going to be the like a scope of discussion going forward. We're going to talk about different types of pension plan. A glimpse of that you might already be given in level 1 under financial liabilities topic. I mean, although I would not expect that you would have really done that in detail sort of stuff. The confusion, like I was saying, happens because there are different rules of US GAAP and IFRS. And so to speak, the rules have changed from 2013 onwards. So the way you look at on the internet, some examples, etc., the accounting that used to happen before that is different between then and now. So you got to just ensure that you look at the latest study material over internet as well. Then towards the last, maybe 5% of my effort is going to go to the share-based compensation, which is really something which is not, widely tested. You got to focus on these four main aspects. We are going to talk about the pension assets, separate video. We are going to talk about pension liability, again separate video. The pension expense is where a lot of accounting is going to come up. That means I'm making a silent point that there is very little accounting here. And both of these are more a matter of valuation. Okay, it's only here that your income statement, or let's say OCI, becomes a little relevant, and that's where your US GAAP and IFRS starts to make a difference. Again, I'm making a silent point, a discrete point, that here the US GAAP is going to be exactly equal to IFRS. So like I said on the previous slide, that the rules of US GAAP and IFRS are different. They're not different at each point in time. So this is something, again, that you got to kind of learn while analyzing this. And then towards the last leg, which is also important, from a CFA standpoint, is the analyst adjustments that you'll have to make. So 1 to 3 are more to do with the accountant's world, while 4th is more to do with the analyst. So my simple suggestion going forward is try and be very strong on your calculators. We are going to talk about the calculations at least for 80% of my time, and it's only 20% will we be talking about the accounting aspects. If you're good at this, the calculations here are going to be correct and you will be getting the correct accounting answers. Do not try to just read through the core book, etc. You got to practice those examples yourself. Please understand, you have to practice those examples yourself. Unless and until you do that, it will be very difficult to master these concepts of calculation. Pension is hardly accounting. This is 90, like I said, this is 80% valuation. So please be very clear on the mathematical part. And with that, let's just end this introductory video, and looking forward to speak to you in the forthcoming session.